Welcome to Bears in Exile. Today is August 25th, and since the market overview was so short, thanks to our NDE in the morning, I figured I would make a second video going over the potentials for both the bullish and bearish scenarios, just to round things out and see where they could go, just for fun and just for keeping an eye out. And so here we are with black box number 1 and the Dow. We can see that today it did touch the upper band of the major trend and backed off of it. So depending on what happens tomorrow and the digestion of that news, we can infer that if the bears are correct, which this is still sloping down, it's having bumps and everything, but still sloping down. Everyone's waiting for that test of the floor, but beyond that, if we are getting rejected at the upper major trend, we could assume that we will test the bottom of that band on our way back into the minor trend, which would be, a starting point would be 10,800, and the bottom of the minor trend would be 10,600. So, and that's actually a little bit below the lower Bollinger Band, but there's room to move. So if this moves down, the Bollinger Band is going to move, and that's going to be fine. So 10,600, and we do have the extreme trend below that right at 10,500. So very interesting. I mean, that's at its most extreme currently that we can read. Yeah, it's a good 650 points to the downside, and then we would have to see what happens there. Conversely, if we were to rally and the bulls are right, and we go for more than just a test of the bar, the only thing that we have up here is the 200-day moving average, simple moving average at 12K, and we have the extreme trend way up here at 12,600. Actually, it's a hair above that, but I'm just going to round it off. And that's really interesting because if we do rally, if something, QE3 light comes out, whatever, and we just rally like crazy, we break the 200-day, everyone's going to turn bullish, and if we come up to the extreme trend, that's a fantastic run. That's almost 1,500 points to the upside, and after a run like that, everyone's going to be, singing, and the birds are going to be chirping and all that kind of stuff. And I certainly know about birds chirping, but that target up here is shy of the double top we have back here, and it is shy of the slightly higher top we have from May. So for it to go up here and fail, even before hitting the double top, would be fantastic too. I would love to play this all the way up to that, have it fail, and then play it down. But anyway, so there we are. It is a bit of a wide range, but certainly if it definitively breaks in one direction, those are the targets. And going on to SPX, we have left the minor trend. It almost kissed the major trend today. If it fails from that, we can see that to test the lower major trend would be 1120, a good 40 points down from here. And if we were going to go and test the bottom of the extreme trend or the minor trend, we're looking at 1080. So 80 points roundabout. And but if we rally, break out of this, we have the 200-day just above 1280, and if we were to go up for the extreme, top of the extreme, we're looking just above 1380. Now this would be very, very interesting if that occurred, because it would take us over the previous highs. And so that would be the ultimate badness, would be go up here, break the high, and yet don't break the high on the Dow. Now that would be that would be terrible. But anyways, there it is. On the VIX, we have left the minor trend We have left the extreme trend, and the major trend is still way up here, along with the top of the minor trend. So if the VIX were to break down and we rally, we have, well, we've already left the minor trend, but if we were to test the major trend, the bottom of it, we're looking at $23, 200-day moving average right at 20, and the extreme trend at 18. So we're at the 18 through 22 level for so long. A return to that certainly would signal to a lot of people that happy days are here again, and everything is going to be fine. So very interesting. And then of course, if the market breaks down, we do have confluence here at 57 currently. So wow, wouldn't that be weird? Break these two highs, which are, you know, sloping down. If you buy into that we're getting higher lows or lower highs, and but to go back and break those two, that would be definitely a reason for panic. And another 1,500 points or whatever on the Dow that we were looking at a few minutes ago. I'm sorry, 600 points. 1,500 points. 1,500 points on the upside. Anyways, oil almost kissed the major trend. The lower of the major is right here at 1050. Going down to the lower of the minor trend is just below 1,000, and the extreme trend lower is 1020. Now, why are these all screwed up? Why are these going all over the place? It's because these moves that we've been having are not uniform. So while these will reset themselves once things even out, they're actually still kind of useful because they are adapting to massive swings, since that's what we have had. And if we were to get another choppy massive swing, these are possibly accurate targets. Conversely, if we were to break out, we have confluence right above 1250, which would be in the 90s. But anyways, moving right along, TNA, awful lagging chart, and some very surprising price movements. It's gotten so low. I mean, cut in half over the course of this last month. But anyways, we have left the minor trend, the major trend, and we have confluence of the 200-day moving average and the extreme trend up here just below 75, just by a hair. So if we do rally, 75 potentially. But if we are to break down, this is pretty crazy. Major trend way down here at 27, and minor trend way down here at 21 and some change. Which would represent another haircut of 50%. Ouch. And gold. Gold. You can see that today and yesterday we left the minor trend. We kissed the major trend today, lower of the major, and we have the extreme down here at 160 if it was to break down, which would be a just barely coming out the other end of the bar, not even really a proper bar retest if it happened in short order. But if it were to turn around, we have the upper of the minor just above 188, we have the major at 193, and we have the extreme almost at 206. Wow, what a move that would be. SLV, have some fun here. We have left the extreme trend on the upside, We kissed the lower minor trend today and yesterday, backed off of it. 200-day moving average down here at 34, along with the lower extreme trend. And we also have support in the form of the major trend just below the minor trend. If this were to turn around like gold and go up, we'd be looking at 4150 on the upper of the minor trend. And if it really breaks out, we'd be looking at the major trend up here just above 48, which actually coincides with the top that we had back here in April. So that would be really, really interesting as well, to have a major double top or even a break to new highs. That is fascinating to me anyway. Let's see here. What have I missed? UUP, the dollar, politics. This one is much weirder. Okay, we know that the dollar is weak and could continue down very easily. We almost kissed the upper minor trend line today. If we were to go to the bottom, we'd be looking at 20.85. And if it were to break down to test the extreme or the major, we'd be looking at 20.65 roundabout and 20.55 roundabout. Ugh. Weak dollar. Conversely, if it does break out, turns around, tests the bar, breaks it, breaks out. Major trend up here at 21.55. And the extreme up here at 21.75. On the Euro FXE is right in the middle of the minor trend. The major trend has crossed and we are outside of it. If we were to, if it was to break out and start climbing back up, we have the major trend up here just shy of 147. And if it breaks down, almost have confluence at the 200-day moving average with the major trend at 139, and the extreme, if it were to really break down, at 138. So I am definitely eager, very eager for the market to make up its mind, for all the news to come out, for everything to settle down, and for it to choose its direction. And yeah, you could say it's just going to go sideways and just stay sideways. And well, certainly it could. All the volatility that we've had lately, I don't really see a reason for it to abate. If we are oversold, then it needs to correct to the upside. If all of this was just a big scare and the valuation actually was up here, then the extreme trend does make complete sense. And then if all of the news has been correct and we are going down the tubes, then why would it stop here? And there you have it. Just a little extra to go along with the short market overview, and tomorrow is going to be a very interesting day. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.